Welcome back. Five Star Business Finance is the company on our radar. The company reported numbers on 1st of February on budget day, so we didn't get quite chatting with them. But just to recap the numbers, strong AUM growth, but the asset quality has deteriorated. The company's gross NPA stood at 1.4%, while the net NPA stood at 0.65%. Srikanth Gopalakrishnan, the CFO of the company, is now with us. Thank you very much for joining in. This is Rima here. So the first question is on asset quality. We have seen some pain at the lower end of the economy. What is your guidance and outlook on asset quality? Any numbers on the gross NPA and net NPA?
So very good morning to all the viewers, and thank you, Rima, for having me on the show. I would take a little bit of a disagreement with your statement that the asset quality has deteriorated, while the NPAs has shown a little bit of a spike, and this is largely to do with some floods that were there in Tamil Nadu, and more importantly, the coastal Andhra Pradesh also had an impact. So there were a little bit of impact on the incomes for a few days for the borrowers, due to which they were not able to pay a little bit of the EMIs that fell due during the month of December, which is why it just went up from 1.35 to 1.4%. But having said that, if you look at the numbers for the profile of borrowers that we are operating, I think we are still at a very, very attractive NPA ratios. If you compare it with any of our peers or even the large NBFCs, I think we stand out exceedingly well. What we also have done is we have increased the provision. So that's why if you look at the net NPA ratio, it has actually gone down from 0.68% to 0.65%. The guidance that we have typically been giving to the market is a steady state number of anywhere around 1.5% or thereabouts, which is still a very, very attractive ratio for this market, given the kind of yields that we are operating in and given the profitability that we have. Our ability to absorb this is very high. You should also look at this in context of the RBI circular that came in 2021, where today we are completely at par with NPA recognition in line with banks. So it's a daily tagging of NPAs, and once an NPA, it's an ever NPA till the loan completely gets off to a current stage. So it's probably the most stringent methodology to compute NPAs. But if you really look at 90 DPD, we will probably be 30 basis points lower than what you're looking at. It will be about 1.1, 1.15%. So from that perspective, these are attractive ratios, in our mind. A little bit of deterioration primarily because of few days of impact of floods.
Okay, that's a comprehensive explanation. Srikanth, hi, good morning. Prashant here. Now, your sort of customer base is essentially, small business loans, right? Shopkeepers, very small ticket size loans there. We've heard, from other companies, etc., we speak with, that there is a little bit of stress, and that's been true for a while, it's not new, that there's a little bit of stress at the lower end. The point is the market is so vast, the demand for credit is so large that you can pick and choose the good and avoid the bad, right? As you've told us in the past as well. But incrementally, is it going to start to add up a little bit? The environment is not getting easier in that sense, right? So, for example, I'll tell you, we had Amitabh Chaudhary of Axis Bank who was telling us, it was a broad statement he made. He said that in the next 6 months, you will see credit costs rise. It's impossible for them to stay this low. It's cyclical, nothing large, nothing alarming, but that's the direction. Would you agree in your context, Srikanth?
So, Prashant, like you said, I think it's a very broad statement that somebody has made. And the definition of credit or MSMEs in India that we use itself is a very, very broad term. And like you rightly put, we operate in the really lower end of the segment. We're probably a couple of notches above what a microfinance institution's clients are. So we lend between the 3 to 5 lakhs. And what we believe, and we have not been operating in this segment for the last 2 years or 5 years, we've been operating in this product and segment for the last about 20 plus years. What we believe this segment is all about is the resilience. While you will always see some bit of skews in their cash flows at points of time, these are people who are largely cut off from any kind of economic shocks, or even if there is an economic shock, they are probably the last to get impacted and the first to bounce back. Primarily because of the fact that these people provide essential services to common man, without which people like you and me cannot be living. So we lend to shopkeepers, we lend to barbers, we lend to medical shops, we lend to hardware shops. So it's extremely essential for a common man to thrive. While there could be a little bit of skews here and there, we really don't see these customers defaulting. And more importantly for us, the way that I see it is these are all loans secured by the property of these borrowers. And this property represents their entire life savings. So it is not like for frivolous reasons, these borrowers are actually going to go and default the loan, or you will probably see intentional defaulters in this segment, because for a 3 lakh to 5 lakh loan, it's actually not worth committing a fraud. So our understanding of this segment very clearly shows that, like I said, we are going to be operating around, 1.5 to, there are about 10, 15 basis points this way, that way of NPAs. But in context, what you should also look at is our DPDs across the various buckets has been getting better. Our 30 plus has actually dropped from 8.9% or 8.95% to 8.35%. So you're actually seeing, people getting a lot better in terms of their repayments. Our processes are also, we have fine-tuned a lot of process. Today, we actually measure the unique customer collections as against measuring the overall collection efficiency. So a lot of these things will actually end up having very good numbers. So, our credit costs again have been muted because we took a lot of credit costs, especially during the first and second waves of COVID. So if you look at our credit costs for this year, now the 9 months, I think we were at about close to 40 basis points or so. But again, we keep guiding the market that you should be a little more conservative, not because there is a stress that is getting built up, but it's also good to build up some provisions during good times that you can use during the rainy times. So, about 60, 75 basis points of credit cost is something that, again, our P&L is extremely capable to absorb.
Okay.
But not
Can you
because
give
of
us
any,
an over? Sure. Can
sorry,
you
not
give us
because of
Miss-
any environmental stress.
Got it. Mr. Gopal Krishnan, can you give us some numbers on what one can look forward to in terms of both disbursement growth for this year and next?
See, this year on year, I think our disbursement growth has been at about close to 40% or so. We have done close to 3,500 crores of disbursals for this year. Again, Q3 has been almost flat to Q2 because, like I said, about 6-7 days of Q3 was lost to rains in Andhra Pradesh and southern Tamil Nadu. But we expect this number to pick up in Q4. So definitely, I think we will see at least about 25% growth in disbursals to come through next year, 25 to 30% growth to come through in disbursals. And again, we have also been guiding the market in terms of a 31 to 35% kind of a AUM growth that we are looking at. And both of these things at this point of time appear extremely achievable.
So, okay, so AUM in FY25 should be in the vicinity of about, between 11 and 12,000 crores, sir?
No, Prashant. So we will probably end this year at about 9,500 to 9,600 crores. And if we're looking at least 31, 32% growth from there, that's at least another.
Okay, 30%. Okay, 30% in FY25 over the 9,500 in FY24.
Exactly. So we are probably looking at maybe 12,500 crores, 12,000 to 12,500 crores.
Okay. 12 to 12,500 crores in AUM. By the way, last time we spoke, you said that you had borrowed, cost of borrowing had gone up about 10 basis points. This is at the end of December. What have you seen so far in this quarter, Q4?
See, Q4 incremental cost went up by about 7 basis points. Our Q2 cost of incremental debt was 9.5. That went up to 9.57. Again, largely, I would say, primarily, because we are taking monies from some marquee names, we are getting quantums. So there's a little bit of premium that people are actually building up on that. But again, we are also guiding the market for a slight increase to come through. As you would be aware, there was a circular in November 2023 by RBI, where they have increased the risk weights. So that may have a little bit of an impact as we go forward. But our clear thought process is to get the right set of lenders to diversify our borrowings. And if that means there's going to be another 20-25 basis points of impact on cost, I think we are fine.
All right. Srikanth, we'll leave it there. Thank you very much for joining us. Appreciate you being here on this channel. And thank you very much for your time here today. Well, that's 5-Star Finance. Now, IRCTC